Welcome back to Market on Close. I'm Sam Vardis, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. I'm joined by George Tsilis, who's the senior markets correspondent, and we're watching Ondas today. Shares have rallied over 25% this week. What do we need to know about this one, George?
Well, I think, Sam, this is an interesting company in the context, I think, of what's going on with, things like domestic security and surveillance and a lot of defense spending. I think if you consider Ondas as technologies, that fits in with a lot of the, progressive movements that the Trump administration is making in spending for defense. And this is a company that's a small cap company. It's about $3 billion. And they essentially are Massachusetts based, and they supply the marketplace with AI powered drones and imaging technology. They concentrate on drone technologies for infrastructure security. So you have to think about the notion of, electric and water utilities, essentially oil and gas facilities that need some surveillance and security measures taken on by drones. Highway and rail systems are now starting to use drone technologies along with police, and of course, airport security. So essentially, this is a technology that's really taking off, and these unmanned vehicles, from a surveillance standpoint, increases the yield on these technologies to provide safety and security for infrastructure. And this company has been selling their technologies not only to the private sector, but also to the public sector and the Department of Defense. They recently received FAA waivers to begin to mass produce their technologies. The other thing is the company, as of late, if you look at late August, early September, closed a couple of secondary offerings, which were quite large. And despite that, the stock has moved up considerably since then. And they used the proceeds, which were roughly $230 million, or close to 10% of total existing market cap as of today, to secure the purchase of another competing company, Apero, which essentially is a ground robotics company as well as proprietary fiber optics company. So they've been growing not only their existing technologies with more sales and of course backlogged orders, but they're actually making some strategic acquisitions with capital that's been recently raised.
Yeah, it's a fascinating theme, isn't it? I mean, one of the first headlines that I woke up to this morning was that Germany's Munich airport had been shut down overnight because of a drone incursion. And so there certainly seems to be a sort of renewed focus on, security and defense spending here. And it's interesting, isn't it? Because when you think of things like drones, etc., I mean, I think people sort of tend to think of spying. But, as you pointed out, I mean, there are shepherds using it to monitor sheep. There's, solar companies looking at it to, keep an eye on their projects, etc. I noticed that you actually talked about this as an overlooked stock back in January, and at that time it was like $2 and change. It's nearly at $10. It's shot up like over 250% since that time. Yeah. What has driven such gains since the beginning of the year?
It's a really good question. So a few things are going on. Right now, as of late, we're seeing sort of a resurgence in small cap stocks. So I suggest that's part of the catalyst we're looking at here with Ondas. But primarily, too, if you look at the trajectory of earnings, not necessarily just on an annual basis, but on a quarterly basis, going back just a couple of quarters, the company reported around 4.1 million in sales. Again, that was the quarterly sales number, not an annual sales number. But the next quarter after that, which is the most recently reported time frame when the stock gapped to the upside, they reported basically a 55% increase in sequential quarter-over-quarter sales to over 6.4 million. That could be a primary catalyst because it gives you an idea that the revenue growth acceleration is moving quickly. And then, of course, the backlogged orders, which as reported last quarter were $22 million, which is essentially at least one-time annual sales on a trailing basis. So it comes down to securing, backlogs, sequential increase in top-line sales. And when that occurs, the company gets closer and closer towards adjusted profitability. In many cases, when these things occur, the company will issue secondary shares, as they should, as they're financing using equity capital. But they're not raising that capital to offset some of the cash burn they have. They're actually using that capital raise, like I said, over 230 million, to buy other companies, to make, horizontal and vertical acquisitions. And so with that said, that increases the revenue base on top of, like I said as well, sequential revenue growth on that quarter from Q1 to Q2, which grew sequentially at 55%. So for what it's worth, that financial metric matches, again, the movement we've seen, in particular the breakout that occurred on the stock going back to essentially late June, early July.
Yeah, and I mean, I'm just looking at a one-year chart as well. I mean, it's shot up 1,198%. So it's been quite a remarkable run up here. Thank you so much, George, for getting us across at that one. Have a great weekend.